Good morning. It is June 11th. It's 10 o'clock. So I'm already done trading for the day. But I am going to throw on a trade here if we get the ORB strategy breakout, since a few people are trading that in the Discord. So I've already traded. CPI news come out this morning at 8:30. News releases, they're a catalyst for instruments to move. So we don't know what's going to happen ahead of time. We know it's going to move one direction or the other, so we just have to prepare for that. Now, I went ahead and bought both Nasdaq and ES before news, and as you can see, I waited the news candles right here, and then we had it pull up and pulled back. I waited on it to pull back on both these and give me green candles. So basically, both of them pulled up, and ES had a buy signal in here, and then I waited on them both to pull back, and then on this green candle here, that's when I went in on both Nasdaq and ES. So you'll see where my trades closed out as I moved my stop up as it climbed, and then basically came back and I reversed my position into a sell position. And then the sell position then, of course, got closed out here on a pullback. So I kept my stop one level back, and then as it pulled back here, it took me out. So right now, so that's two trades. So a little over, no, not quite. So not quite 2K on the day on these, but there's the first trade, there's the second trade. And then what I'm going to do is stick on the ORB indicator, and it's just one I'm using from LuxAlgo. So on this indicator, you have to decide if you're looking to trade that, sit out the first 15 minutes or first half hour of the market. And in back testing on Nasdaq, it seemed that a lot of times you needed to wait at least the first half hour, because if you only waited the first 15 minutes, you would get taken into a trade only to see it reverse. So what I'm going to do is pop that on the chart. So what that is right there is it's the 645 line. So that vertical line right there, I just put on 645. So, 945. So that would be the first 15 minutes. So waiting the first 15 minutes, you still would not be in. So you're not in either way on this one. But a lot of times, waiting the first 15 minutes, then you'd get like a red candle here that would take you in only to see it reverse. So historically, that's what's typically happened. So basically, we're going to wait for this and wait and see if it closes above the high or below the low. My caution at above the highs is this right here. So we have the high of the between 9:30 and 10 o'clock, which is right here. Okay, so that's our high mark. And my only caution would be this right in here. Okay, we have several candles that barely are above that level. So if I look at this line that we have here as our high, okay, from that start of the U.S. stock market open, and that's going to be our high. Let me change this to yellow. I like yellow better than blue. So if I'm looking for that to be our, if that is our high, which it is, that's our high between 9:30 and 10. So that's my one caution. If it goes up and closes above that high, what if that's all it gets? Because don't we have highs in here? We have wicks in here. So what if it doesn't break those? Okay. So that would be my caution, would be this right here, these highs up in here. Okay. And then, of course, then we've got, it may only go to, get as high as it did right after CPI. Okay. So that may be your target. That may be as high as it gets. It could only get to the inside top. So somewhere in there, you need to be willing to close partial, because that may be as high as it gets. Okay. With the lows, we've got almost a clear path. We'll come in and grab a line, bring it down. So there's our low right there between 9:30 and 10. Sorry, I kept saying 9, but 9:30 and 10, the first half hour of the stock market. So there would be your low. And then, of course, we know that we have one right in here. That may be all it gets, too. Okay. Now, our first targets are right here off this indicator. So it automatically prints wherever this 50% line is how I have mine set up. So you have the 930 high here. You got the 945 low here. So that first half hour or first 15 minutes, it made the high and low. Pulled back in here about the middle by 10 o'clock. So that middle area, that distance from the high to the middle or the low to the middle, that distance is where this marks these as 1. Now you can adjust these out. So you'll see that mine is it's showing, we're showing targets. And I shut off the historic. If you turn on the historic data, it goes back and it kind of scrunches your charts in because it shows the previous days. So that's good for back testing, but we don't want it on for live testing. So right here where it says show target, you can toggle them off if you want. If you're using other targets, I like to leave mine on, and mine are set at 50%. So basically, whatever this 50%, the distance is from the high to the 50% or low to the 50%, that 50% mark is where it's projecting these targets. You can change that all you want. You can go 75, and that's going to move that target out a little bit further. So see, if I adjust it 75, it actually moves the target for a long position up to where the high is of the CPI news release. After news release, sorry, the move after news release, because here's CPI right here. Just that big wick back and forth. Taking a lot of people out. That's why we wait. I like to either get in before news, or then you got to wait it out a little bit and get in after. I don't try and take a news candle or take a news trade right at news. So you can leave these on 75. You can put them on 50. 75 is going to give you that. If you leave it on 50%, then basically if you put your stop here, it's more of a 1-to-1 ratio as long as you're getting in near the high or low. So that's something to consider, because as these candles go, let's say it closes above the high. Well, you're going to get in long. I don't know how long that candle is going to be. If you're waiting on a candle to close above the high, that candle could be way up here. Okay, so if the candle closes and it's way up here, that's going to chew up part of your potential profit. Okay, so that's something to consider. So you have to decide for yourself where you're going to close partial at. But I do know, however, again with back testing, that Nasdaq a lot of times only went to that level right there, the 50% level. Okay, so you got to be willing to close out part of your trade at that point. Now I'm going to try and trade it today with just one. I'm trading on NQ and not micro. And if you look at where one is right here, it is basically right at where this turned. Okay. So now it's just a big waiting game. It's kind of boring, but you got to wait it out. We'll make it a dashed. We'll make it a dotted line off that. So we're not going to do anything until and if it closes above that. So if we get in again, or if I get in, this will be the third trade of the day. And that's how I traded these other two. If you notice, again, after, had buy signal, CPI come out, big green bullish candle, which broke the highs over here. It came back to test this level over here. So if you go looking at your highs and lows, which we always do, We're always watching the bounces. We're always watching highs and lows. Okay, see what the instruments do. This is price action. What is it doing? What is it telling you? CPI went up and down, came over. We had a big bullish candle. That bullish candle broke the highs over here. A couple red candles here. What did it do? It came back to test the highs over here. So we see that over here, this particular price level, okay, this price level right here on this line was a good level of resistance as the instrument kept hitting it, right? Good level of resistance. So when the resistance is broken, okay, then we look for that resistance to hold up as support. So that's in term, it's basically past resistance turning into future support, or past support turning into future resistance. That's support and resistance. That's as simple as it can be, and it is. So basically, when a resistance level is broken, such as this, a big green bullish candle broke that high over here, this resistance level, it came back to test it, and definitely that price level right there held up as support. Okay. So if you don't use support and resistance levels, you should. Highs, lows, support and resistance. But it came back with two red candles and basically gave a green bullish candle, and that was my entry candle. If I get in long, I want to see a green candle for my entry. If I get in short, I want to see a red candle. So that played out very well, as I was able to get in with a tight stop, or my stop was actually down here below this, just barely below that low. And I'm sorry, no, my stop was right here. I did a tighter stop. I don't know why I'm saying it was way back here. Typically, I would go further back, but if news release, I'll go with the tighter. It's right there on the trade indicator. This profit target, I don't know, for lack of a better term, we call it a profit target tool. All this is the Fibonacci tool, Fibonacci retracement tool, where we've changed and just put targets. We've got 0, which is the bottom. 1 is your entry. 0.5 is a half stop, because a lot of times when it moves to target 1, we will move our stop halfway to protect our position. And then basically number them 2, 3, 4. You have to number them back and forth, left to right, and then down, or it will not set up right. But that's how we set that up. So all it is again, the fib retracement tool. I like that versus the position tool. You know, here's your long position tool. It basically gives you one target. There's the difference in them. If I did them side by side. So I got tired of setting up like this, and then as an instrument climbed, I would have to sit there and move this. And as it climbed further, I'd have to move it again like this. And as it climbed further, I'd move it again like this. I got kind of tired of it. So I was looking for a better option. And, I've used fibs in the past a lot. And that's when I thought, well, wait a minute. The fib tool already has target levels, fib targets. So let's just change that. So that's all it is. So you can change this back at any time you want. Set it up as a template. I can go back to default fibs, or my fibs actually, and it'll change it to what my Fibonacci setup is on my extensions and retracements. And then you'll see where I've got it set up at trade levels. So pretty simple to change. I like it. I think a lot of people that are using it do like it, because it does give you those targets. You can see where you've closed out. So like here where I closed out, where I kept moving my stop and moved my stop to level 4, that is 3 times my risk level. Okay. So since it labels it 0 here, 1 is your entry, 2 is your first is 1-to-1. We can't control that. That's just the way this is set up in here. Okay. So level 2 is 1-to-1. Basically, level 3 is 2-to-1. It's just one level back. So level 5 is 4-to-1 risk. So getting stopped out on this pullback, I was stopped out around level 4, which is 3-to-1. So good risk to reward on that.
this one here, entry, stop. I just did a tight stop on it, almost got stopped out. I didn't want to risk a lot of what I locked in on the first trade. After all, 1510 was a good day, and that was one trade, right? And I traded also on ES. So why risk that? Why lose that back? Okay. So when I got in, went with the tight stop, again, almost stopped out, and then it pulled, on this pullback in here, you'll see that it hit my stop. My stop was at level 2. So I only got 1-to-1 on this. It actually hit 2-to-1, and when it crossed over and closed, when it closed past level 3, that's when I moved my stop to level 2. So I trailed 1 level back. Missed out on a little bit more of a push. You know, it took me out, and then it continued to go down to level 5. So if I wouldn't have got taken out there, if I would have left my stop back 2 levels, then as it hit level 5, I'm looking for it to close past it. So my stop still would be around this level, about 3. I might have squeaked out another level and hit 3. So we're going to wait. It gets kind of boring waiting, but that's what we're going to do. We're not going to do anything else. Not going to pull the trigger until we see a close above the high or below the low. So again, my caution on if it breaks to the high side, and I'm saying this because it's approached that high side. It's hit the high from 9:30, which is the start of the U.S. session. So, you know, 9:30, we had the start of the U.S. session. It popped down. It's pulled all the way back up. Okay. So 9:45, it hit and made the low. It's pulled all the way back up to where it was. So again, if it breaks this high and closes above that high, and I know I have a lot of lines on the charts right now, but I wanted to show, I wanted to show this area in here, because this is my caution area right in between these two, that if it barely closes, and I'll go ahead and take the trade, okay, based on what the way this is set up, is if it closes above that high, you're going to take it. But my caution would be it may not go above this area, okay? So I have to be, I have to err on the side of caution. Now, as far as a stop, typically I go to the halfway point, and I'll put my stop in there. So we'll put a stop marker there. But typically, again, that's where I'm going to put my stop, is that halfway point. Now, you can go with a little tighter stop, which would be like a quarter stop, a quarter of the way back in. And I have to decide if I want to go with the half stop or go with the quarter stop. This should be all decisions you make before you even take the trade, look to take the trade. You should already know where you're going to put your stop based on a strategy that you're trading before you enter the trade. And if you haven't, you should also dial out to a 4-minute or 4-hour time frame. Look at the 4-hour chart, see where highs and lows, support and resistance levels are, and draw your zones. 4-hour support and resistance zones. So basically, you're looking at a 4-hour chart and looking at the pivot points, the turn, not the pivot points, sorry, but the pivot turns off a 4-hour time frame. So you have a swing up, you have a swing down, like this right here. If this was a 4-hour chart, and you had to swing up and swing down, I'd be marking my zone from that high to down here on these bodies. Okay, and that would be my 4-hour turning zone. I would mark this one as red because it's at the top of the chart. So that would be my area that I'd say, okay, if it goes up and hits this zone, it may turn. Okay, same thing I'm doing here with the support and resistance levels, or drawing these horizontal lines off the highs and lows. It's the same thing. As it goes up to those levels, it may not get any higher. So we have to be cautious that
it may turn at any point hitting one of these lines. Same with the zone. And that's why we've marked these two. Again, the candle body's here, and we can adjust the line down a little. I just had it right on that 1-to-1 level. So it looks like we closed right on the line. So I'm not in yet because it closed right on that high. Okay, I want it to close above the high. That's the rules to this setup, is you need a candle to close above the high or below the low. We actually had a buy signal here because it barely closed above. So we could take it, actually I can if we want, because we did get the buy signal. So it closed, it barely closed above that high. So again, how cautious are you going to be with your entry? Are you going to go ahead and say, nope, anytime it gives me an arrow, I'm going to buy or sell? Or are you going to be a little cautious and say, well, we have these highs here. I'd rather see it go ahead and close above that, and that's where I'm at. So for me, I want to see it close above this yellow line, and then I'll get in. That's me being a little cautious on this today. Because I know from watching price action over the years that it may not break these. It may just bounce, turn around, and go all the way back down. Right now on the power trade indicator, we're all green. We don't take signals in the first half hour of the stock market open. So we wouldn't take this sell. So we consider that to be mixed signals. A little bit before and during the start of the stock market. So we don't want to get caught up in that. So we ignore that sell because of that reason. So right now everything's holding green. So I just want to see the candle close above the above that. I don't go in with pending orders. You could come in if you want with the pending order to, buy if you want and put a buy stop in there. I am logged in right now on the competition account. So this is a demo account for the competition. So I switch back and forth between accounts, but this is what I traded today on the competition account. And then I posted out there too, Top Step X on Discord. Let me go look, because I'm out of my positions over there. But I traded gold on Top Step X. All right, guys, so there it's popping. I didn't take it, so I'm not in. Don't know if it's going to pop and run without me. We'll see. So, if you would have got in right when that arrow popped, you'd be okay. You'd be up a little bit. That next candle, all it did was go up right to that yellow line. Again, these highs. For me, I'm a little extra cautious. So that may not play out for me well. We'll just have to see where this candle closes. But since this candle right now is up above the yellow line, I'm going to wait for it to close. And as long as it closes up there, we'll go ahead and take it. We got about 2 minutes. I think I'll go with my stop at a quarter loss, which will be here. I'm going to go a little bit tighter because we can go ahead and draw a marker out there. I don't know where we're going to get in at yet, but we would draw our target tool from the low to wherever our entry is. Not sure where we're going to get in. And as you can see where it already is, let's say it closes at the high of that candle. If it happens to close there, then our 1-to-1 is right here, level 2. So it's up in that area
from the news. So we'll wait till we get in before we do that. See, it doesn't surprise me that it's having problems here. And that's what, you'll use support and resistance and your highs and lows. You're watching swings. This all gives you a lot of information about what's going on about the chart. So by drawing those levels, by drawing we were already looking for it. The rules of this strategy is for it to break a higher low from 930 to 10. So 930 highs right here. Well, for me, again, I had that caution because of this area up here. That as Nasdaq came down here, it just kept going up and up and up and hitting that area. So for me, that's a price level of concern. Okay, that as it goes there, it may not break that level easily, and it's not doing it easily. It pulled up to stop right there, so we still got about 9 seconds. This thing's probably going to barely close above, just like we did down here. If it closes up above there, see, we got another 3 minutes. So do I take it? For me, I'm still cautious. It might seem like I'm overly cautious, but that candle did not do a thing. Okay? It pulled up above it a little bit, but it closed underneath that horizontal line. So I have to be cautious. I have to watch what's going on, and I have to be cautious. It's great to get into trades. I love trading. You guys love trading. You're here trading every day. Okay? But that's no reason to just throw on trades. Okay? You have to watch what the charts are telling you. And I know it looks like a ton of lines on the chart, and it is. Delete whatever you don't need. I can delete these from earlier. We don't really need these on. These were my lines off. We'll leave it on there. But those are my lines basically off the target. This level 1, and then we have level 2 because I wanted to see where does that level play out over here. And as you can see, it's right where those candles turned, right around there. So we're still not in. So again, if you're doing things like this, you're watching highs and lows, you're watching, candle turns, and you're watching where you get these turning points in the market, it should not surprise you. Like I'm not surprised that it's hanging out here. Now, I've seen it time and time again where it just pops and runs. So it could pop and run without me. But it's one of those things, do you want to get in right now and risk sitting in the negative for a while because of the pullback to catch it if it pops and runs? Okay, because it could do that. It could pop and run. All right, so you have to decide. For me, I'm already good on the day. Okay, so for me, I'm already good on the day on this. 2 trades, almost 2K, and then we're waiting on this third one. See if we can get a third trade out of it. And this is a different strategy. Okay, this is not. I didn't trade this way my first 2 trades. So we switch over. And that's what I've tried to tell people. A lot of people, there's a few people that were looking at trading this and are, and it's just a different strategy. So in the morning after 8 a.m., which is this vertical line here, in the morning when I get up, if I start at 7 or start at 8, I'm looking to trade, and I'll get in trades based off of signals, our signals here on the Power Trader Pro, plus any bounces. We're looking at bounces off of high and lows, and then we switch over, and this is a whole different strategy. So this doesn't go in the regular count. So these 2 trades right here are based off of my normal trading. We traded news, it popped up, and we traded the reverse of news. Okay, and if you notice, where it ended up over here, where it bottomed out here, was basically back where it started. Okay, this is back at 8 o'clock. And that happens a lot. Not always, but it happens a lot. Where you can get in one direction, news, and then it'll start to turn. And you're watching the bounces and not even dialing down on a 1-minute chart
so you can see the swings on these. Okay, dial down to a 1 minute, and you can see where right here where I sold on this red candle. If you notice, what did it do? It broke the low over here. Okay, so news, we had a big pop, pulled back, pushed back up again, did not, it failed to get to the high, so it came back down to test this low, gave it a little bounce, and then it pushed through. This red candle right here, that's where I closed, the long was closed and short was placed. Okay, that red candle right there was a break of this, a break and close of that low right there. Okay, so that's your entry for the short. Let me get back over here because we just broke the high. All right, so for me, I am not in yet. We're going to wait and see. Hopefully this is the candle that closes up above these highs, and then we'll go ahead and get in. We still got 1 minute left. Now, the only thing I can hope is that it doesn't push all the way up here, halfway up to level 1 before it closes. I don't want that. I'd like it to close right where it is. I don't know if I'll get what I want or not. We'll see. May not. But I'm happy where it is, closing there, if it closes there for my entry. Now, for those that took it right when it closed just barely above and gave that signal, you're in the positive for a little bit. You're in the positive over here, and then it went all the way back down to where you were at zero profit here, and now you're back in the positive again. So for me, I just haven't entered and haven't sat through that. But you'd be in the positive if you entered there. Even if you entered here on this green candle, if you entered there on the green candle, you've been barely in positive for a while, and then back in negative, and then you'd be in positive a little bit right now if that's the candle you got in. It's going to mark these two right here. So that one barely closed above. This one definitely closed above, but my caution was it was right there. And now I'm hoping this is a failure to launch and I can get in. Oh, we had a close, and it closed barely above. So we're going to go ahead and take it. So again, this is on a the competition account, so it's a demo trade. That's my quarter stop. It's up $1,000. So $1,000, a little over $1,000 on the quarter stop. Again, it's one contract. If we were doing micro, this would be equivalent to 10. I've learned to not concern myself with the dollar amount. Trading is what trading is. So we're shooting for that 1-to-1 or better. So again, it may not even get up to 1. I've seen it time and time again. Of course, again, in back testing this strategy, a lot of times Nasdaq barely got to 1-to-1, which is up there. So that would be where I would want to close out part of my trade if I was doing micro and had 10 on. I'd want to close out about 8 on level 1 and move my stop to a break even. Or at least move it up some and cut my risk on my remaining contracts in half. Thought maybe it would pop for us, but not sure that's going to happen. We also have the inside tops. Guys, you can get as many lines as you want on the chart, but inside tops is right here. That's something to always be aware of. Inside top, inside bottom, it is a thing. So if it pulls up and turns right here. So what happens if this pulls up and turns right here? Okay, at this inside top. Basically, the inside top is the underside of a high. The inside bottom, okay, would be here. It would be the top side of this candle because that's your low. That's your swing bottom.
Okay, so the inside tops and bottoms, if it pulls up and turns, so if it pulls up and turns right here at the inside top and goes down, what has that done? If it comes up and turns right there at the inside top and comes down, well, basically that right there, turning point, will be a lower high than over here. Okay, so the inside tops and bottoms are something you really do need to be aware of. I don't know. They're out there. You can go on YouTube and find out stuff on inside tops and bottoms. Learned about them back in 2006. One of the guys in our group actually was talking about them. But and basically, again, if it goes up and turns there and comes down, well, then that turning point is lower than the turning point over here, so a lower high. That's what your inside tops and bottoms will alert you to, that you're getting a lower high or you're getting a higher low. If I was trading on micro and put on 10 contracts, what I would do is up here, I would actually come in and put on a sell limit of 8 up here, so that as it goes up, it would actually sell off 8 of my contracts. But that we're trading one, we can't do that. The only way to manage this is by moving our stop. If it goes up to level 1, I am going to lower my risk by moving my stop loss up. And we could have went with a tighter stop on this. I mean, we could have went with the stop, up in here. It went pretty tight. I'm basically keeping my stop at the quarter, and it's below this low, in case it came back to dip and test this area here. So right now it's not done a thing. Taking an order on top step on gold. I've only traded gold on there today. So I just bought. I don't have that screen set up to where I can switch back and forth to show you. And if I drag it over here, it won't show on my screen. I'll set that up another time. But basically, it looks like a minefield over here. Went long, went short, long again, short again. And then I just went long again. So here I know what I can do. Yeah, let's see where it is. Well, I don't know where it went. I cropped a screenshot over there so I could drag it over here. So there it is. Not up much yet. I'm up 167 over here on the screen. So risk, was about 2. Oh, sorry guys. Kind of blowing the screen all over the place. So risk 260 here. Right now it's up 190 on the other screen. Sold off 3 over there. Since I'm not solely watching it, I'm doing other stuff. Went ahead and closed off 3 and hit 200. So we are doing nothing on Nasdaq, are we? This we wait. We knew it was going to have issues getting above this level, and I didn't know it was going to stick there. Trading is not always exciting. Yeah, we wait, guys. Sorry this isn't more exciting than what it is. I did move my stop a little bit on that gold trade. Not up to break even. Let's see here. As it's pulling back, it's going to probably pull back to where I'm in the negative a little bit, and I'm okay with that because, again, I've already closed out part of that trade.
So here's the gold trade on Top Step X. I'll have to set something up where I can switch screens back and forth. So again, I got in long with 5 contracts, had my stop down here below the low, and when it pulled up, I closed 3. And notice that I closed 3. It looks like just at a good time, because when I closed 3, it actually, has pulled back some. So I closed 3 out, pulled my stop up to where on the remaining 2 contracts, I'm only going to lose $24 back of what I locked in. So that's a good trade so far. I don't know if it's going to bounce here or go. It may come down, and I can't really draw on this since it's an image, but as you look, it may come down, take me out, only to test these highs right here. So if you look at the chart where this red line is, where my stop is, I kind of put my stop in the way and up there where it might get taken out, only to see it bounce. Okay, so I got kind of aggressive with my stop, and it may actually come down. If you picture it coming down and hitting my line and bouncing, if you look across the red line where my stop is, that's the highs here, high here. Okay, that's the lows in here. That's also a bounce over here where it pulled up and bounced. So, and then it pulled up here to test that level again, hit it before breaking. So that would be my would be where it may actually pull down and turn there. It may give a bounce there and go long and continue long. So if it does, it's going to take me out before it goes long. Not really concerned about it. I've already, as you can see, placed several trades in here, so I'm happy with my performance on the day. And if it happens to take me out, it happens to take me out. And that's how you got to do it. Make your decisions, live with your decisions. I'm hoping it bounces now at my entry price instead. Okay, we're not. It's finally giving us a little bounce there. All right, so we were up a little bit. Now we're back. Again, not much excitement. I like where, it popped there. Not really popped, but it pushed up above these highs, sat and hung out there for a while. We're getting another little push. So we're just watching what the chart's showing us. So it did, after breaking, again, watch your levels as support and resistance levels. So Anytime resistance in this case, any line above us is going to be resistance. So watch for a level to be broken, such as this line here. And then, so once that resistance level is broke, watch for it to hold up as support. See if it holds up as support. So right now it did. As these candles came back to it, it held up as support, and we're getting a pop off that. So that's good for our buy position. I just hope we have follow through. Again, my air of caution, you guys know, is this inside top. We have the candle closes here on this bounce, and then, of course, the high from CPI. So we'll see what happens. Just waiting it out. So nothing exciting today on this particular strategy. The excitement was earlier, off CPI news. So this is a more relaxed trading. On the news releases, I'm typically down on a 1 minute time frame watching them, watching the turns, watching the bounces. So this is a whole different strategy. So again, if you're tracking your, you should be tracking your results. Guys, we used to do this on a 3-ring binder. So if we met for breakfast and we were trading together, if you were going to ask me about any of your previous trades, you needed the binder with you. I wouldn't go back and look on someone's computer. I wouldn't wait for them to go back and load up their computer to look at a trade from last week. It's just not going to happen. So we had 3-ring binder where they printed out the trade sheet. So we've got the trade sheets out there. If you need it, let me know. But basically, when we take a trade like this, we would take a screenshot of the entry. So I entered on that candle. I would go ahead and take a screenshot. Okay, we take a screenshot. It's got our lines on there. It's got everything. So if that's what I was trading was just this strategy, I wouldn't have these on there. I wouldn't have, this. I wouldn't have this. So I would basically take the trade, whether it be, this candle, or the one I took, take the trade. And then when I'd take the trade, I'd take a screenshot. And then when I'd exit the trade, I'd take a screenshot. So the trade sheet has the second sheet of the trade sheet, or the back side of it. You could put those two charts in there. The entry chart, your exit chart. And then the trade sheet itself has the rules on it to where you can mark your rules. So on this strategy, it would just be, you're taking a buy off the break of a high, or a sell off the break of the low. I mean, that's pretty simple trade rules. And then as you move your stop, you would mark your stop movement on the trade sheet. So if we got together and again met for breakfast, lunch, whatever, and you wanted me to look at your trade from last week, you could pull that trade sheet up. Now, of course, now we do it all electronically and through Google Sheets, and that trade sheet, right now, when you take your trades off that for the day, you can hit a reset button that I have on there. And the reset button, what it does is it makes a copy of that trade sheet, dates it today's date, and then starts you with the fresh. It resets the template, the master sheet. So you enter stuff on the master sheet, and then the first sheet, and then when you hit again reset, copy and reset, it makes a copy, dates it today with all your markings on it, and then you go back to that template or that master sheet, and it's all zeroed out for you for the next day. So it is something you should be doing, tracking your trades. So as I track my trades, this is a different trading strategy. Okay, the same with Sunday night. Sunday night we do a lot of gap fill trading, where the instrument opens up. There's a huge gap from Friday's close to Sunday's open, and a lot of times the instruments will fill those gaps. Okay, they'll go back to that Friday's close. So what we do is we trade that that gap fill. That's Sunday night. So that is a separate trade. It's Sunday night only, the gap fill. And so there's 52 weeks in a year. So you have 52 trades on that strategy. keep track of that strategy completely separate. If you're trading this orb strategy, keep track of it separate. It is not going to be thrown in with my trades over here that I already took. Okay, different trading strategy over here. So this is different trading strategy. This is something totally different over here. And that way you know going through in the future if it's something you want to keep trading or not. Non-farm payroll. Non-farm payroll is separate for me. Non-farm payroll, the first Friday every month. List the first is on a Friday, they'll move it. So non-farm payroll is the unemployment numbers each month that come out. Happens 12 times a year. So guess how many trades non-farm payroll has? Non-farm payroll has 12 trading days. I track that separately. The worst I've ever done is out of a year, again, I'm going to track it for a year, but out of a year, the worst I've ever done is 4 days, 4 losses out of 12. So at the end of the year on non-farm, even that worst year, I call it the worst year because it had 4 losses and then 8 gains. So even after all that, that year was profitable on my non-farm trading. So am I going to trade it the next year? Sure. The only time I'll stop trading it is if I have a bad year on it, not a bad month. I could have I could trade non-farm next month and lose, and I'm okay with that. Traded non-farm last week and it was 6,500. And that was trading 6 instruments. And I don't get in all 6 at once. The first instrument I got in was Nasdaq. Second was ES. But by the end of the morning, I was also in gold and Bitcoin. We're up about 3. So it's hit the inside top. If you're closing partial, you might want to consider it, as it may bounce here. The only thing I can do with this is I am going to move my stop up some. So we'll move the stop up to reduce my potential risk. So I risk a little over 1,000. I'm going to move it up in here and, wherever, about 600, 575, whatever it is. Basically, I'm moving it up under these lows. So that's about all I can do. That's my only option because I went with trading one contract versus going to micros where I could have traded, 10 contracts, closed out 8. So it has hit the inside top. I don't know if it's going to pop and get to that level 1. If it does, pop above this inside top here line and get up toward level 1, I'm gonna just trail my stop. I'm gonna move my stop. Aggressive with the stop. If I wanted, I can move it right there. So right under this candle body. So, it came up, right? It hung out here. We had the line here, this vertical line, and it come up and let me kind of blow this up a little bit or zoom in a little. All right, so it again broke this high from over here, broke that horizontal line, hung out above it, right? So it broke resistance, and that resistance held up as support. We had a nice little bounce here, finally up in profit a little bit. So if I'm going to move my stop, I can move it tight right here because of this right here, because it came down. We had a nice pop, okay, right at that horizontal line. So that is, previous resistance from over here holding up as support here, and we got a push off that. So I just lowered my risk. So this right now is a successful trade to me. Okay, I risk 1K. It was like, what was it, 1050? So risk 1K, and right now my risk is 340. Okay, so to me this is still a great trade. Am I in profit yet? I am. Am I closing any out yet? No, because I can't. I have one contract on. So my only option is to trail my stop.
So don't look at this as a bad trade. To me, this is 100% great trade. It's a great trade. I risk 1,000 initially, with the stop down here at quarter stop. Well, now my stop's up here. So now I'm only risking 340. Okay. So I was able to lower my risk only because it's moving a little. I can't help it that it's moving slowly. I really can't. You can't do nothing about it. And it's hit that inside top. It may not go higher than that. Okay. So it remains to be seen. Try and pull that down there. But to me, this is a great trade so far. I've been able to lower my open risk. Okay. And again, if it pops up here and gets up here toward a little more toward level 1, I want to see it break that inside top. If it breaks this inside top and closes above, then it's going up to level 1 and make it a little higher. So then I could move my, stop a little bit. If I wanted to get aggressive, I could move my stop now and go up here. Okay. And even reduce it even more. But to me, this is successful trading because I'm only trading one contract because I decided to trade this. It hasn't moved. And you can't help that it doesn't move. But keep in mind, during back testing, a lot of days it only went to that level 1 and stopped. And of course, we're trading on a news day. So we're trading this after news over here. So you have to keep that in mind, what it did during news. It popped up and it turned right here. So it may not go higher than this. So to me, if this backs up and takes me out, I'm okay. I've lost, where I move my stop, I'd lose 330 versus losing 1,000. That's still capital preservation. That's still good trading. It's a loss, and I don't care. Because again, I've done what I set out to do. I got in the trade based on the rules. I moved my stop based on my rules, based on seeing resistance broken and that resistance being held up as support here, a nice push above the highs, this candle closing above these highs over here, closing above that level where I got in, and then a little push off that. So moving my stop off that level. So I'm doing what I'm supposed to do. I'm doing what I set out to do every day. And if you get a loss, you get a loss. It should not be a big deal to take a loss. You're going to take losses in trading, especially doing this. Now, if I did the 10 micros, if I want to enter on the 10 micros, then of course you could have closed out some. We were up about 300, I think. It wouldn't even be at a 1-to-1. But again, we have cautionary zones. We have this inside top. We have where the body's turned right here, which is pretty much like right there. So you have to err on the side of caution that it may not even get up there, may not get up to test the high from the news release. This is all signals, signs you should be aware of from the past, from earlier today, for your future trading over here. I had someone one time ask me, they're like, you're always saying look to the left, look to the left. Look, yeah, I am always saying look to the left. You're over here trading, but you should not ignore what's on the left-hand side of the chart. And they literally asked me, they're like, all I hear you say is look to the left. And I'm like, yes, if I'm getting in over here, I'm going to look to the left to see where it may potentially turn. Okay, because where it may turn, those are my targets. Those are levels I'd want to close partial. Those are levels that if it hits, as it came up and hit the inside top, I move my stop up to protect part of what I originally risked up here, which was 1,000. So yeah, you're going to hear me say often, look to the left. Don't know why it didn't take me out. Because it hit my stop. There we go. All right, so I'm out. So we'll sit here for a little bit longer, see what it does. I'm not looking to get back in. If you are, you're going to take it when it pulls back down and bounces, see a green candle. However, look at what it did. It just climbed up to the inside top. It did not even break that level. Okay. So it had a nice climb. If you would have got in, on either of these two candles here, you were in a little better profit. Hopefully you closed some. If you're trading with one contract, then you wouldn't have been able to close. So if you traded on micros, you'd have been able to close them out. So we'll look to see if we get a bounce here, because it fell back down. So it gradually went up there, and then a quick fall. So it looks like it's going to fall back down into that high-low area. But basically, that's all it did, was go up to the inside top. So I'm okay with the loss, because again, I lost 330 versus losing 1K on the day. But I full well knew that it may not have gotten past the inside top, these candle closes, and then of course we had the wick high from news. Those are your levels that you need to pay attention to. And as it broke out here, it went to those levels and went to the inside top, and that's it. All right. So now we've got a deeper pullback. I'm not even interested in getting in. So where's my... What did I do? Did I delete those off? It's way down here. So I have to put, this was my third trade, so this would have been a minus, and that was 330. Okay, so still good on the day. If I can get a minus sign in there, guys. It's still good on the day. We had 1510 on the first trade, and then 465 on the second trade, and then a minus 330. So if you take 33 from the 465, you're left with 135. Add the 135 up here, so 1645 on the day. So that's a great day. Two different trading strategies. The first two trades are based on our traditional trading. We got in on news. I got in on the pullback. So I got in a little early before the buy signal came up, because ES, I was watching, ES actually had a buy signal here. So ES had a buy signal on that candle. I just decided to wait for it to pull back and bounce, and it pulled back, and that's where I entered on Nasdaq, and then that's where I entered also on ES. The buy signal came a little bit later, still great follow through, but the buy signal came on, it would have been this candle here close. Okay, so that candle right there that closed, so you would bought on that one. So keep that in mind. Where it says buy here, it's not a buy on that it's a buy here. Okay, it just signals on this candle. So you would have bought in here, and then of course still successful trade if you waited on the buy signal. Buying, if you bought on the ES when it gave a buy here, you would have sat in the negative a little bit. So I waited on the pullback and then got in on the green candle. So traditional trading here, and then again down on the 1 minute. So on the 1 minute again for the entry short was over here. So as it bounced, off right here, as it bounced off this low, came back, went back to test it only when this candle closed. So when this candle closed down here past this low, so that low was broken, closed past, that's where I entered. So I entered short there, let's see, let me move this out of the way. So entered there, sat sideways for a while, negative, positive, negative, positive, negative, positive, negative. Just sat sideways for a while, and then finally it popped. Okay, so I traded it against, of course we had buys here off of the Power Trade Pro indicator, but this is news trading. So since we have a high impact news release, typically when they move one way, they will reverse and a lot of times go all the way back to where they started. And that's what this did. Over here before the news, that's 8 a.m. right here behind my head, sorry. So this is 8 a.m. right here. And that is, that's where it came back to over here. So that's news right there. Pop up, pulled all the way back, ended up where and turned over here where this was here. So again, we're ignoring the Power Trader Pro over here because that's during the news cycle. And then on the orb strategy, got in, and it only went to the inside top and pulled back. So if you're entering on that, you would actually enter again because it's before noon. So how we had back tested this, or I had back tested this, was you're getting in on every trade before noon. And if you happen to have no winning trades before noon, you could take it in the afternoon between noon and 4. I'm not doing that because, again, I'm positive on the day. So I'm not really interested in getting involved with another trade. It may be a negative. So this is good trade overall, over 1K on the day, or over 16K. What was it? 16, what did I say? 1645. So 1645 is a total on the day. So great trade overall on all three together. All right. So have a good day. I will talk to you later.